In today's video, we'll delve into the 10 best growth stocks to invest in for 2024. If you've ever wondered which stocks could skyrocket your portfolio in a turbulent market, this is the video you can't afford to miss. We're about to explore the companies that are not only surviving but thriving, even as economic forecasts look uncertain. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. As the U.S. economy faces uncertain times, with muted growth expected in the coming quarters and the possibility of a mild recession still on the horizon, finding reliable growth stocks could become increasingly challenging. High interest rates, which are currently at their highest in over 2 decades, might continue to pose a hurdle for growth investors. However, it's not all gloomy. Despite these economic headwinds, growth stocks have outperformed value stocks since early 2023, a trend that many investors believe will persist, especially once the Federal Reserve decides to pivot towards rate cuts. Today we'll be exploring 10 top growth stocks that have demonstrated consistent earnings growth, specifically those that have achieved at least 15% annual earnings per share growth over the past 3 years. These stocks represent a mix of industries from technology and finance to telecommunications and streaming, offering diverse opportunities for growth-focused investors. Let's kick off with Apple Inc., ticker AAPL, a powerhouse in the tech industry known for its innovative products like the iPhone, iPad, Apple Watch, and Mac computers. Beyond its stellar hardware lineup, Apple has also built a robust ecosystem of services, including the App Store, Apple Music, iCloud, and various licensing businesses. This seamless integration of hardware, software, and services creates a unique user experience that keeps customers within the Apple ecosystem, a strategy that's clearly working. To analyze Apple's stock effectively, consider using the exponential moving average, EMA, to identify the current trend. A rising EMA could suggest a bullish trend, while a falling EMA might indicate a bearish trend. Furthermore, the Relative Strength Index, RSI, can help determine if the stock is overbought or oversold. If the RSI is above 70, the stock might be overbought and due for a correction. If it's below 30, it could be oversold and primed for a rebound. What makes Apple particularly appealing is its stable free cash flow, which it leverages to return capital to shareholders through dividends and stock buybacks. This makes Apple not just a growth stock, but also a solid choice for income-seeking investors. Analysts are optimistic about Apple's future, projecting an 8% revenue growth in fiscal 2025 and 7% growth in fiscal 2026, with a buy rating and a target price of $260. Apple's current trading price of $224.53 presents a potential upside for investors looking to capitalize on its sustained growth. But before we proceed, here's a question for you. If you could pick one tech giant to lead the next decade of innovation, which one would it be, and why? Comment your thoughts below. Now let's move on from the tech hardware space to a company that's been making waves in the world of semiconductors and AI technology, NVIDIA Corporation, ticker NVDA. NVIDIA Corporation has truly revolutionized the world of computing. Known for its high-performance graphics processing units, or GPUs, NVIDIA has expanded into data centers, artificial intelligence, AI, and autonomous vehicles, positioning itself as a leader in these high-growth sectors. The company's fiscal first quarter numbers were nothing short of spectacular, with revenue growing by an astounding 262% year-over-year and net income skyrocketing by 628%. Looking ahead, NVIDIA's growth prospects remain strong, driven by its expanding market and increasing opportunities in software and AI technologies. Analysts project nearly 98% revenue growth in fiscal 2025, followed by a more modest yet impressive 23% growth in 2026. To gauge NVIDIA's momentum, investors might want to use the Moving Average Convergence Divergence, MACD, indicator, which can help identify potential buy or sell signals through its crossovers. Additionally, the Bollinger Bands can provide insight into NVIDIA's volatility and potential reversal points. When the stock price moves above the upper band, it could indicate an overbought condition, and when it falls below the lower band, it might signal an oversold condition. With a buy rating and a price target of $139, NVIDIA's current price of $123.74 offers a great opportunity for investors to benefit from its continued growth trajectory. From one tech giant to another, let's turn our attention to a leader in digital advertising and cloud services, Alphabet Inc., ticker GOOG, Google. Alphabet, the parent company of Google and YouTube, is a giant in the online search and digital advertising spaces. Alphabet reported a solid 13.6% revenue growth in the second quarter, driven by a 28.8% surge in Google Cloud revenues. The company's commitment to AI innovation is a significant growth driver across its ads ecosystem, and it's expected that Alphabet can maintain at least a 10% revenue growth through 2025. In addition, Alphabet's cloud services are experiencing robust growth, with annual revenues projected to increase by at least 25% through 2025 as more capacity for AI workloads becomes available. This growth in cloud services, coupled with its strong advertising business, makes Alphabet a compelling investment. Using a combination of EMA and RSI can help identify the trend and momentum for Alphabet. Watch for crossover points in EMAs to spot trend changes and use RSI to see if the stock is entering overbought or oversold territory. With a buy rating and a target price of $220, the stock's current price of $165.49 provides a good entry point for long-term investors. Switching gears from digital to analog, our next pick is a leader in the semiconductor industry that's benefiting from the AI boom. Broadcom Inc., ticker AVGO. Moving on, we have Broadcom, a diversified global leader in analog semiconductors. Broadcom stands to gain significantly from the boom in AI infrastructure investment. The company's products, including networking switches and application-specific integrated circuits, are critical components in many high-tech systems. Broadcom is expected to generate $11 billion in revenue from these businesses in fiscal 2024. For Broadcom, monitoring the MACD indicator could help investors identify shifts in momentum, while Bollinger Bands can highlight periods of low volatility before a breakout. Broadcom's strategic integration of VMware is progressing faster than anticipated, adding a layer of recurring software revenue that boosts margins and enhances financial visibility. Analysts project Broadcom's revenue to grow by 43% in fiscal 2024 and 14% in 2025, with a buy rating and a price target of $185. Broadcom's stock, currently at $162.34, offers an attractive valuation for investors looking to capitalize on the AI wave. Let's transition now to the financial sector, where our next company is a global powerhouse with a strong growth trajectory. JP Morgan Chase & Co., ticker JPM. JP Morgan Chase, one of the world's largest financial institutions, continues to strengthen its position in the market. With around $3.8 trillion in assets, the bank's acquisition of First Republic Bank in 2023, following its failure during a regional banking crisis, showcases JP Morgan's ability to capitalize on industry disruptions. The bank has reported consistent double-digit revenue growth in recent quarters, driven by its expanding wallet share across several core areas. Looking ahead, analysts project a 19% revenue growth in 2024, though this growth is expected to slow to 1.1% in 2025. Despite the expected slowdown, JP Morgan remains a solid choice for investors, holding a buy rating and a target price of $230. With the stock currently trading at $216.63, it provides a relatively safe bet in the financial sector. Sticking with the financial theme, let's explore a company that's a major player in the electronic payments industry, Visa Inc., ticker V. Visa is a powerhouse in the financial sector, leading the global credit card market with the largest electronic payment network. Visa's vast addressable market and expanding card acceptance globally position it well for continued growth. As the world moves increasingly away from cash transactions, Visa is set to benefit significantly from this shift. Beyond its core payment processing business, Visa is exploring opportunities to provide additional value-added services to its existing customers, further enhancing its growth prospects. Analysts are optimistic, projecting 10% revenue growth in both fiscal 2024 and 2025. With a buy rating and a target price of $310, Visa's current price of $267.94 presents an opportunity for investors seeking exposure to the digital payments revolution. When evaluating Visa, consider using EMA and MACD to assess trend direction and momentum. If the stock price crosses above the EMA or the MACD line crosses above the signal line, it could indicate a bullish trend. Building on the success in the payments space, our next stock has also shown incredible growth in recent years. MasterCard Inc., ticker MA. Like Visa, MasterCard is a global leader in the payments industry. In the second quarter, MasterCard reported solid growth metrics, including an 11% year-over-year revenue growth and a 15% increase in net income. MasterCard's management is highly regarded for its innovation and strong execution, positioning the company well to capitalize on the ongoing shift towards digital payments. Taking a closer look at the table, we see a compelling story of growth and potential across these stocks. Apple is projected to sustain robust revenue growth thanks to its diversified ecosystem and innovative product pipeline. NVDA stands out with its impressive revenue projections driven by strong demand in AI and semiconductor technology. Alphabet is leveraging its dominance in digital advertising and cloud services to maintain solid growth, while Broadcom is capitalizing on the AI infrastructure boom to enhance its revenue streams. On the financial side, JP Morgan Chase continues to show resilience with expected steady revenue increases despite a challenging market environment. Visa and MasterCard are positioned to benefit from the global shift towards digital payments, promising steady growth in the coming years. Meanwhile, Netflix is expanding its subscriber base and content offerings, ensuring its leadership in streaming remains unchallenged. T-Mobile's aggressive expansion in the 5G space is set to drive future growth, and Wells Fargo, despite past challenges, is poised for a turnaround with projected improvements in efficiency and earnings. Overall, these companies not only show individual strengths, but also share a common trajectory of adapting to market trends and capitalizing on future opportunities. Diversifying your portfolio with such high growth potential stocks could be a key strategy for navigating the evolving economic landscape and achieving financial success. But before we wrap up, here's a final thought. What's the one growth stock you'd bet on to double your portfolio in the next 5 years? Let us know in the comments. To wrap up, these 10 growth stocks represent some of the most promising opportunities for investors in 2024. Each company has its unique strengths and growth prospects, making them worthy of consideration for any growth-focused portfolio. However, remember that investing in the stock market always carries risks, and it's essential to conduct your own research or consult with a financial advisor before making any investment decisions. Thank you for watching Simple Investing Secrets. If you enjoyed this video and found it helpful, please like the video and subscribe to our channel for more content like this. And as always, please remember that this video is for informational purposes only and does not constitute financial advice. Happy investing!